Good morning, I guess afternoon now, everyone. I hope you're all well today. Thank you very much for joining us for the next big trade session. Ivan sends his apologies. He's pulled up lame yesterday, some sort of virus. It's a local version, nothing to be alarmed about. But he will not be joining us. So, but thank you, everyone. And I can see a few names of people who were at our meetup session last night in Melbourne. Thanks. We had a great night last night. We were joined by Graham O'Brien from the ASX, and we met up down locally here in the CBD in Melbourne. It was about a little bit over 50 people attended, and it was a lot of fun, and it was good to see everyone, and a few people I haven't seen for a long time, and good to put a few faces to names as well. So yeah, and thanks, Natasha. All right, so guys, please come at me with your questions. First of all, any advice contained in today's presentation is general only, doesn't take into consideration your personal circumstances. You need to decide for yourself whether it's appropriate for you, and past returns are not an accurate indicator of future returns. All right, now let me, which version are we logged into here? Okay, so there's a couple of things coming that I want to show you today around new technology and developments that we've got that are quite useful. Want to get into talking about some trades, and thought I may as well start off where we left off last time, talking about a couple of strategies that we had done. Okay, let's have a look here in the simulator. I'm going to strategy build. Well, we can go, simulator. So last week, what have we got here? What have you put? This is a long strap. Long strap. Did you put the straddle in? No, that's okay. I'll fiddle around with this in a moment. So last week, Ivan was talking about doing a long strap, and I was talking about as normal, talking about a straddle, right? So the straddle is buying a put and buying a call at the same level, and it's a trade that you do because you think the market's going to head in one direction or another, and it's a trade that you want to do because you believe that volatility is likely to increase, or at least it's not going to decrease, right, too much, right? And the strip is where you buy two puts on the trade. So you've got two calls here. So in Ivan's case, he wanted two puts. Yeah. Let me refresh. All right. And basically what Ivan was saying is that he thought that for a number of reasons that it was more likely. Sorry, Tim, what do you say?
If you want to set a new one, you just click on the plus there.
But is this one fine?
Yeah, it should be fine.
Yeah. All right. So basically, Ivan's view was that the market looked overdone. He was worried about the fact that even though the market was breaking through new highs, the big companies weren't going with it. So while the XJO was at a 52-week high, there was almost no companies that were breaking those 52-week highs, or if they were breaking it, they had really low ADX. So it was saying that, in the business, in the companies that have moved through, we weren't seeing any confidence in that move. It had tried it a couple of times, and it wasn't feeling to him like it was succeeding. So the way he wanted to trade it was to go into a position where if the market did break up and went up, he had a hedge in place. So he had that call option hedging his position, but he thought more likely what would happen is the market would give up its gains. Now, he was in fact very correct. So if he put that trade in, how many contracts have you done there? We're just doing the 2-on-1. The 2-on-1. All right. So the max loss for Ivan on that particular trade would be 2,385, and you'd unlimited on the gain side. So if he had in fact done this trade, then the following day the market cooled a little bit, and then we had this here. So on Monday it would have been up. What's that? To about $1,000. About $1,000 up, and then escalating from there. whereas if he was still in the trade, he'd be up about $5,000. And if he was in it at this moment, that's flattened out a little bit, even though the market's gone down. I imagine that's because volatility's come off slightly. But it also in the simulator actually, so the simulator might not be, probably isn't picking up today's data. All right. So, and the thing is, and Ivan were talking about, this is Ivan probably would be in this trade still, because that's the way he trades. He goes for big profits. The trade that I did was a straddle, so I'll move that to just, I had one call and one put. And if we go back in to where we were last week, the following day, nothing happened. Yeah, there was a slight pullback, but nothing really happened. And volatility actually, I think even though it was a pullback, did nothing, might have even gone down slowly. So a bit of time decay. And then, things improved from there. So it was a good little trade. Now I closed out of it on Monday. But it was a great little trade for me. It did its job. But again, that's the difference between Ivan and my trading, is that I'll take profits off the table a lot faster, and he will go in there and stay in there, and he's more likely to have significant gains. And again, he's also more likely to have more of an opinion than I. But that just sort of probably speaks to our personalities in general. So, so they were the two trades we were looking at last week out of everything that we liked. Unfortunately, Ivan was been quite busy with a bit of a project at the moment. He didn't get his trade on, so he's been kicking himself, but that's motor racing. All right. So that's what we were looking at last week. I might just go back and see, at the moment, we were talking about this last night. I mean, the market, if we just go back and have a look at it, bring up a chart of the XJO, I'm not even really addressing. It's almost, because we look at this every day, we've kind of adjusted to the fact that this has happened. But wow, right? So, we've spoken about, and I always put disclaimers on there. What do I know when it comes to fundamentals? We don't know. We're never saying we can predict the market. And I still haven't changed my opinion, despite the fact that we were talking about coronavirus last week, and our observations of the people we knew in businesses and that run businesses and around in Australia and around Asia was that real problems, real challenges, and things have ground to a halt. And we felt like that if people felt like things were going to go back to normal, then that might blow over. But if as soon as people felt like this is going to spread, this could take time, this could become a bigger problem, that might be a significant event in the market. And we saw that over the weekend as the news increased. US market came off massively, and our market has done that as well. So for anyone using the platform, very easy. If you just want to, see how much something's fallen, just click on measure and just drag that down. You can see that, what are we down about 7% now from where the pullback started, and from our high, which was not very convincing high, and obviously a little bit more than that. So, the other thing is that I probably should, excuse me, and I'm going to get rid of ADX off this just but on, let me just kill ADX for a moment, because I want to have a look at volatility, which is this is how I set my screen up, because I like to look at volatility. We can see that vols have head up
67% on the top left.
Yeah, that's massive. So 67% from the bottom there, right? From where this move started, and it's saying it's gone off a little bit today. Now that this move has continued, I imagine that it might go up slightly. We'll see, but we're getting up towards the top end of the range for vol for us over the last 12 months. So it'll be interesting to see whether it goes beyond that. So at this point in time, again, this is a big move. It's a fast move. Will it continue? Well, it could well do, right? So we're just not really sure. And I know that you know, we'd like to have an opinion or set a trade, but you know, my trading rules are not really set up for when there's a big change in the market conditions. So what am I seeing at the moment though is vol is getting up towards the higher end of its range. And, you know, quite often that will be, you know, once it sort of peaks out will be the time where we'll see some sort of relief rally or something like that occur. But again, I'm not necessarily predicting anything of the sort, but just historically that's what we've observed. So, but vol's getting right up there. So if I was doing a trade today, I'd be definitely looking for a strategy where I could benefit. Well, I'd be probably looking at shorting vol as opposed to going long vol. All right. So just to play out some of the scenarios that you could look at that some people might trade would be a bull put spread. So here we've got a bull put spread. I might just adjust these strikes right down. I would probably be looking at something like an out of the money bull put spread would be one way of trading it, and you just play around with what works for you. But you probably start off by looking at you know, looking at a chart of the XJO and then thinking about what level do you think it's going to find support at, all right? And, you know, if I think that it's going to be, you know, let's say, maybe some people might think that there's support at that level there. Sorry. I hate this line. All right, so, you know, wherever you might think you're going to have some support levels, you can set yourself up. Now, you might be waiting for some sort of consolidation at a point and then saying, well, look, I think below this level that we're consolidating, I want to put a bull put that gives me some, you know, that I believe that, you know, it's unlikely to head below that level, and then you can set your trade up. Right, so in this instance here, if I set up the bull put down at a 6,400, 6,350, my break even on that particular trade is going to be, I want the share price on expiry to be above 6,400, I'll make max profit, and 63.91 is the level. That is, if it's above that level, I'll be at break even or better, okay? I would generally then look at a matrix, all right, and you know, I can see that, you know, today over these different days to expiry, you know, what's my profit if the share price goes sideways? You know, I'm getting time decay working in my favour and so forth, all right? So I think we'd probably look at, so 5 contracts. Okay, so basically saying I'm going to this trade that I'm going to make $940 and I'm risking 4,000. Right now, so what am I getting? A return on my investment like 20% roughly, a little bit better than that over, you know, this period of, I'm out, so that this is to the 19th of March, right? So you could definitely, you could go out to April with this as well, right? And then all of a sudden your max loss is 3,840, but your max profit is 1,160, right? Now you'll get your maximum time decay in that last 3-week period, but you might want more time in the trade. It's up to you. There's something going on with the matrix at the moment the guys are working on, so that it's subtracting something off the expiry val, so we'll update that shortly if you're worrying about that number there. But if we have a look at this, so today through to expiry, we can see, well, look, if there was a share price, if the market rallied up a little bit or consolidated, then you could easily see, say, 20% come out of volatility. Sorry, I should be saying negative vol. And so if that is to occur, the benefit that I get from that, is pretty immediate. So if you said, the market consolidates and goes up a little bit, that, you could pull a shorter term profit out of it. You don't have to go all the way through to expiry. And again, probably thinking ahead, we're not seeing these conditions yet. The way in these higher vol environments might be, people might use this sort of strategy, and then if the market rallies up a bit, try and set a bear call in at the above, the 52-week high, or up at the 52-week high, those kinds of levels, so they can get, more of a leg into an iron condor and all those sorts of things. So anyway, I mean, that may be a strategy that I'll start to look at if I can see or get a feel for where I think there's a good level that it's not going to go below. But at the moment, the market's still looking, it's still coming off quite a bit. So from the high, if I was down to say 6,400, so from up at this level, if I take this up here and said I went down to all the way to 6,400, that's 10%. All right. So, on a, from a, coming off down 10% in a short period of time, that's a pretty significant move. So basically I'm able to now put 10% off the highs in place, and provided it doesn't go through that level and stay below that level on my expiry day, I can make money. If there's consolidates and moves up, or if it moves down and time decay comes out of the trade, all of those scenarios, you can make money out of that particular type of strategy. But anyway, that's probably what I'm looking at the moment as the types of strategy we'll start bringing in to our thinking, based on volatility being a bit higher. I don't know. What else is anyone else got any trades that they're looking at the moment or have been doing? I mean, it is a good time if you've got a directional view on anything. There's a lot of volatility around. We've seen a lot of trading in the market over the last couple of days, and obviously people are moving positions, repairing positions, rolling positions out and the like. All right, so Ryan said APT. Let's go and have a look.
It'll be Afterpay.
Afterpay, yeah. Ryan, what's your view on Afterpay? Relative to the rest of the market, it's looking pretty strong, isn't it? So it came down to its 50-day moving average and sort of has bounced off that.
Strong buying pressure as soon as it hits it.
Vols haven't, vols are, relative to the rest of the market, right down there. Sell volatility dropping. Yeah. Okay. Yeah. Interesting. Yeah. So I definitely think that's an interesting trade. So it's like, where's its IV rank? It's probably about half. I'm going to guess it's 50 or something like that. Maybe. Yeah. Wrong button. IV 41. Yeah. So it's actually in the lower end relative to, so
it has had
long
quite a
call
bit of volatility recently.
Yeah. Sorry, say that again.
It has had quite a bit of volatility.
Mm-hmm.
It's a very volatile stock in general, but it is coming off very, very high levels of volatility.
Mm-hmm. Yeah. So Ryan's looking at long call and selling puts. Okay. Interesting. Yep. Aggressive, but I like it.
Synthetic long.
Yeah. 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 Very good. Now on the, let's have a look at the scans. So there are quite a lot of stocks that are approaching lit shorts. So we've got SIM and WPL and WTC as identified scanned lit shorts at the moment, but we've also got Bendigo, Flight Centre, IAG, South 32, Suncorp, and WiseTech, Tabcorp, yeah,
Centre Group.
yeah.
They're all approaching earlier today. Maybe some of them have they've dropped an ADX or pulled it back a little bit, but yeah, there's a bit going on, especially with the lit short fronts. Quite a bit of opportunity for those bull put spreads. Sorry, bear call spreads.
Bear calls, yeah. And what is there anything, Tim, that you're looking at the moment? Any trades that you've been eyeing off?
One that I find interesting is even with everything going on, the market's falling quite significantly. A2 milk is one that I watch quite a bit, and it does seem to be holding up fairly strong. And even though I did pull back a bit over the last few days, there's just been a lot of strong buying pressure as soon as it's pushed through that 50-day moving average. So there's it's pulled back a bit, but it did have a very large gap up today. It seems like an interesting stock to be looking at. Volatility is high. However, it's still maintaining its price. Something interesting, of course, is Qantas, given the whole scare to the travelling industry in general and leisure industry. It's had a fairly significant fall. So we're up at around 670 in recent days, and it's just fallen straight through, gap below the 200-day moving average. And now we're looking at around $5.60 and still falling by the looks of it. Volatility has increased quite significantly, and the story makes a lot of sense. Coronavirus is going to be affecting a lot of travel related companies over the short term at least.
Yeah, absolutely. Yeah, I think that's a really interesting one. So do you want to price something up there?
Yeah. We have a look. What we'll be looking at, you reckon? Lit short? Have a look at a support line first, maybe. But going back, we're probably looking at a little bit lower than where it is now. But got to be prepared that there might actually be a bit of a push through. It's maybe around 550 or 525.
What period of time is that chart over? Just adjust that to 1 year.
Looking at weeklies here. Over 5 years, weeklies. We can see fairly strong support lines, especially at 525.
Yeah. All right, well, let's price it up. So it'd be definitely one to keep an eye on.
So pull up a lit short in our options cookbook.
And the other, I guess, Tim, what would be interesting, and we might get something in the newsletter around this and the dailies, just companies that are affected and where they're trading, and things that are lining up around that would meet the rules on a breakdown. We can go and have a look at. So we might get something out in the newsletter published over the coming days around that.
Sounds good. Yeah. Check in maybe 335.
Yep.
Get a max loss around 2848. Max profit 5528. Just got to be aware with this one, there is a dividend coming out in 4 days. So when you are calculating your entry price and your payoff, just be aware that the share price will be falling by another 14 cents approximately. So factor that in when jumping into this trade.
I mean, what would you compare this to? I mean, you'd probably want to go back and have a look at a chart of September 11 or something like that, and then kind of impact that that had on airlines. I'm not sure we won't have that data, I don't think.
We'll see where it goes back to. We won't have implied volatility data at least. If we're looking, yeah, this big gap right here. Quite a large fall. Go from 340 approximately,
Yeah.
down to around 250.
Yep. All right.
So about a quarter of the share price, a little bit more.
All right, what have we got here? David, Tiger version updates probably impacting Qantas today. Yeah. Yeah. All right, beautiful. Guys, has anyone got anything else they would like us to go and have a look at today? Now, there's a couple of things that we've been working on. I might just log in from another and just show you a couple of updates that are coming. Is Carl online today? No, he's not, but one of these came from Carl. If you're in a position to join us on Tuesday in Sydney, we're running our meetup session at ASX Square, which is in the ASX building. We'll be joined again by Graham O'Brien. Ivan will be off his deathbed by then, and will be there with us as well. We'd love to meet you all. If you're in Sydney, come along. You would have been seeing invites. It's in the daily market update that goes out. You can book in via there, and you can send us a message now if you want to go via chat, and we'll get someone to book you in. All right, so what we've spoken about was how do I do this?
What are you looking for?
The notifications section that I've got. Yes, that's right, in alerts. Okay, so what the guys are building in, and this isn't live, it's live in ours at the moment, so being able to look at price movers in the portfolio. So if certain movement occurs in your portfolio, you can be identified, that can be sent as a notification, and any 52-week breakouts, right, a push notification coming through. It's obviously a key level that a lot of people track, right? So those notifications will be built into the alert system very shortly. The other thing in alerts is, let's go PHP, if I can spell, add, is that we're going to have the volatility rule. So you will be able to set where the volatility goes above a certain level or below a certain level, that you can get an alert, which obviously is just as important to us when we're trading certain strategies as the price move itself. So that will allow you to set your alerts up. And you can set those alerts up as push notifications on your phone. So Tim's the man. Tim, do you want to just talk to that?
Yeah, sure. So you sign into the Implied Volatility website on your phone, and
which browser is the best browser?
Google Chrome, of course.
Mm-hmm.
It's designed for Google Chrome, so that'll be the best one. If you're using an iPhone, you can use Safari. That'll be fine. And you can set up the notifications by clicking on this green Enable Notifications button on the lower right-hand side of the screen. It's just highlighted green now. And that will push through push notifications on your device. So the website will automatically let you know when these market moves have happened.
Yeah. All right. And then if you also you've got the ability to manage your other notifications. So for example, I don't know what's going on this computer. But it's going to make a liar of me. I don't know what this little box is. Anyway, it then allows you, say, for example, if you get filled on an order, whatever it might be, you can get notifications coming through, push notifications coming through to your phone as well, which is very useful if you're mobile, and managing it that way. We've shown you guys. The other thing is just on the setup on your mobile phone. Sorry, I probably should do this from another, not from my trading account. But when you go into the trading dashboard and you're setting up, you obviously we've included all this information in there for you, so you can, you've got all the information you need. But in setting up from your phone, the best way to look at different screens is actually to go into the trading dashboard and set up the different layouts. Now, from a mobile, it's difficult to look at, looking at 6 different modules from a mobile phone is impossible. You want to set it up as one, and then you can set each one up. Let's say you say depth. All right. All right, and then I go in and I can add that I want order depth or whatever it might be. So I click here, put in BHP, and that will bring up depth for me. So I can then navigate through to the different things that I very, very easily from my mobile phone, or if I want to look at a chart or whatever it might be, I can set that up. And that's probably the easiest way to look at different screens whilst you're using your mobile phone, so you don't have a cluttered screen. You can use tablets and so forth, but just based on screen sign, that's going to be most of the issues that you're going to find there. All right. Okay, beautiful. Anything else that you would mention today, Tim?
Yeah, all the futures and all the major indices continue to be in negative territory, so something to be watching out for overnight, see if it holds, and it looks like it will be quite relevant to trading tomorrow, if not today.
Yeah.
Gold is still high, 1647 an ounce, bit of a flight to safety there, and iron ore seems to be holding up okay at close to the $90 mark, $86.69 approximately.
Yeah. All right. Now the other thing the thing that I wanted to mention was setting up a hedge. We spoke about David. Yeah, I can get you those slides, no problem at all. Tim, just remind me. Yep. All right. So David's just asking for the slides from Graham O'Brien's presentation last night. We can shoot them across to you, David, no problem. What was I doing? Yeah,
Protection.
Protection. So I'll let you drive this.
Yeah. So we'll look here. So we're looking to set up a new strategy.
Yep. So if I wanted to, for example, I had in this example, say $650,000 share portfolio, and I want to put insurance on that portfolio, I want to insure it. What's the easiest way of sort of pricing this up?
Sure.
So we go into a what if.
So we go into the quick what if position from the portfolio screen. The quick what if is just on the lower right hand side of the screen here. Sorry, lower left hand side. And then we can put in our stock code, which will be the XJO index. And from here, let's say we want to buy a put at, where are we at now, 6,600. So we'll find our 6,600 put. And we've got a portfolio around, currently worth around $660,000. You'll probably be looking at 10 contracts for some hedging of that position. Now what we'll have here is how this will affect your portfolio. You're looking at $12,510 to enter into a position. Now what we want to see is how this will affect your portfolio if there is, let's say, for example, a 2%, 5%, 10% or 15% decrease in the market. So with 2%, overall, you would be $7,000 better off from being in this position.
What's the date that's calculated?
Good question. We'll change the date to the expiry, make it a bit more accurate for our purposes, so March 19th. There we go. So come on expiry. Where are we? 6,600. Yeah, perfect. So you'd be looking at 2% fall. You'd have around $365 change in your portfolio value. The time decay would erode part of this protection. 5% fall, you'd be looking at $20,000 benefit to your portfolio. A 10% fall, you'd be looking at a $50,000 benefit to your portfolio approximately. And a 15% fall, you'd be looking at an $86,000 benefit to your portfolio. The assumption is the portfolio was around $660,000 worth of stocks. Diversified and beta of one.
Good. So everyone is going to have different size portfolios or different makeups and so forth, but that is just a way you can go about stress testing it. You could equally, if you just like, I've got a client who's just sent me an email. Actually, I was just checking my email while you were talking, Tim, and they want to hedge. Let me have a look. BHP. They've got $400,000 worth of BHP. And they want to hedge against further downturn. So to advise this client, we'd be going in and saying, let's have a look at BHP. Now, the question that I'd be posing to the client is, are you trying to protect 100% of the current value, or are you trying to protect it from going down to, are you happy to protect it at, say, $30 or whatever it might be, because obviously the further out of the money we're going to be, the cheaper it's going to be.
And that all comes down at the strike price of the put that we're buying, of course.
Yeah. So if we said, what, $33?
Yeah. If we're looking just for protection, could even do a European.
Yeah. Yep. And the question is, for how long do we want to put this protection in place? And we're going to pay up, so we might go out to, say, end of April.
Yep, 23rd of April.
Yep.
And for $400,000 portfolio, you're looking at doing it from my head, probably 100 shares per contract, maybe.
What's the share price at the moment?
So we got the share price at 30, was it 36? $35.21. So we'd be looking at
110 contracts?
Yeah, roughly 110. So for a $400,000 portfolio, we'd be looking at, with an expiry until the 23rd of April, we'd be looking at premium of $10,230.
Yeah, just bring it onto zero. Yeah.
Yeah, 1 second. Here we go. So there we go, that's on zero.
Okay, so your protection is below $33.50, and if
Might still have the date on there though. Give me 1 second. There we go.
Yeah.
So that's starting without any expiry date.
Yep. Your premium is $10,000 roughly, and if the market falls 15%, then the option is worth $40,000 on expiry day. Is that correct, Tim?
Yeah, if we change the factor in the time decay,
Yep.
the option will be worth around $30,000
Yep.
on expiry.
Right. So you're obviously building some protection in there, and then from that point, you can reset. So 15% fall is what's going to be like $7 roughly from where we are now. But you can then go, well, I'm going to use this protection to go and buy more stock and so forth, right? So obviously we're looking at the volatility on BHPs at 24%. You know, when you're buying home insurance and there's a bushfire and you live in the middle of the bush and it's not too far away and the wind's blowing in your direction, insurance can get pretty expensive, and that's pretty much the issue that we've got with setting insurance at the moment. It's going to be more expensive than if we'd set our insurance in place a little while ago. However, the market has pulled off. So look, but to go in there and value that, it's very straightforward. You've got all the tools you need to be able to do it. Again, because we had a few questions on it last night, but that is how to do it. So if you're looking at insuring anything in particular, you can go in there. If you need some help on driving it, just give Tim a call and he can step you through it.
Always
Beautiful.
help.
All right, guys, thank you very much for coming along today, and all the best with your trading. We will see you back online next week, and for those of you in Sydney, hopefully we can catch up with you in Sydney on Tuesday. Have a wonderful day. Cheers. Thanks, Tim.
Cheers, everyone.